Hello there and welcome. My name is Abdel, and today I'm going to reveal the trading framework that I created myself. Nobody else in the world teaches trading like this, and you will not find this anywhere else. And the best part, you only need 5 to 10 hours a week to make it work. Now, how do I know all this? The reason I know this is because I spent the last 10 years building, refining, and developing this framework myself. And this exact framework is the reason why I'm currently ranked top 5 in the world in the Forex trading competition. I'm doing my best to end up top 3 at least here in the year 2026. It's a competition throughout the whole year. This is my current track record. I have made 79% in return for the year 2026. You can see the first trade was executed on the 20th of January. So I came 3 weeks late to the party. This is my win rate over 90%, and this is my average win-loss ratio, but most importantly, a very steady equity curve. Now, I'm not showing this to brag, but I'm showing you this to really emphasize the simplicity of this system and that it actually works. And more importantly, it hasn't only worked for me, it is also producing results like these for the people learning it from me. So this is real traders, real results, and we have so many success stories. This is Jimmy. Jimmy is a middle-aged guy. He has 3 kids, he has a family, he has a full-time job, he's an engineer, and after he learned the Mechanix trading system, the system that I've created throughout the last 10 years, he saw his payouts like immediately after only a couple of weeks. Within a month and a half, I think, he started making consistent payouts, over $2,000 almost every single day. And if you don't believe it, you can just take your phone and you can scan this QR code. You can see here from FTMO, which is a prop firm. He also has payouts from My Funded Futures. And this is just to show that it doesn't matter how busy you are. It doesn't matter how your life is. You need a trading plan that can adapt to your lifestyle, right? And this is Simon. Simon also has been in the trading industry for many years, been on YouTube, tried everything, courses, etc., etc. And then he started implementing this system and immediately started seeing results within a couple of weeks. And these are also rewards from FTMO. We also got Björn, who has been a mess in trading and really had a hard time finding consistent results. He had some small results here and there, but it wasn't consistent enough. And once he implemented this system, his results went through the roof, and he's making consistently thousands of dollars every single month. This is Kenneth. Kenneth is a really interesting story. Kenneth is a truck driver, and he works out 16 hours a day, 6 days a week. So if you think you don't have time, listen to Kenneth's story. Even Kenneth managed to succeed with his trading and is now making consistent payouts on his live accounts. You can see this is from 2026, from April, and this is the story of many other students who, as soon as they learned the system, they started seeing consistent results. Many people got their first payouts. So maybe your goal is to make an extra 1,000 a month. Maybe it's 10,000, maybe it's millions, maybe it's financial freedom. I don't know what your goals are, but my goal today is to keep it as grounded and realistic as possible so you can see that this is actually achievable. But whatever your financial goal is, you can reach it with the right framework. Now, I'm not teaching because I need to. I make money trading. I really need you to understand one thing. I'm a trader first and an educator second. I'm doing this because people genuinely want to learn how I at least simplify trading in a way that I have never seen before. Because after spending more than 10 years in this industry, and believe me, I tried everything from ICT, supply demand, smart money concepts, trend lines, simple support resistance, institutional order flow, price action theories, breakout strategies, market structure, signal groups, volume analysis, liquidity sweeps. And if you are a trader already, 100% you know what I'm talking about right here, right? And also indicators. I've used a lot of indicators. Now, I'm not saying this because this doesn't work, because I've studied all of it and I've seen many people succeed with some of the elements that I just showed you. So I've tested all of it and I traded all of it. But after years of going deeper and deeper into trading, I realized one thing, and this is really uncomfortable because most traders are drowning in information online, on YouTube, but still have absolutely no real framework for decision making that suits them personally. So when I say I've tried everything, I literally mean it. I have tried everything out there. As I said, everything from ICT, one of the biggest mentors on YouTube today. And a lot of people ask me, Abdel, if this is so simple, how come it's a very small portion of people that engage in trading that actually succeed? And that's a terrific question. I've tried harmonic patterns. I've tried indicators, EMAs, RSI, Bollinger Bands, VWAPs, simple support and resistance, trend lines, etc., etc. The problem was always information overload, because when you have too much information, you have too many decisions when you look at a chart, and that makes the whole decision process much harder. So I needed a simple system that could make that part, exactly that part when it comes to the decision making, make it easier, and most importantly, eliminate emotional driven decisions. But it was really hard for me to find, so I built it myself. And the crazy part is, once I simplified trading, my results improved dramatically, and also my students' results. Because trading is not supposed to feel this complicated. And it doesn't require 40 hours a week, just 5 to 10 hours and the right framework. That's all it takes to make this framework work for you. If you learn this system, you can achieve your trading goals by spending just 5-10 hours per week. And it will make your trading journey 10 to 100 times easier and faster. All the frustration, all the mistakes I've been through, you will not do the same. And believe me, one of the most important things is preserving your emotional and mental capacity. Because if you don't find something that suits you, you will get frustrated, and that will, eliminate your motivation. Okay, it will ruin your motivation. And what we want here is we want a journey. Of course, it's not gonna be easy, but we want to make it as easier as possible. So there's no need for you to go and find the solution yourself when it's right here in front of you. So, and this is my favorite part, because the best part is this works on every market, whether you want to trade Forex, metals, commodities, indices, crypto, soy, sugar, cocoa, coffee. It doesn't matter what market, and I will prove it to you in a second once I show you the system, because it's literally mind-blowing once you understand it, because it's so simple. And that's exactly how trading should be. I'm not saying easy, but I'm saying simple. Not too many decisions, not too many choices. Keep it plain and simple. And the beautiful thing about this part is it works across all time frames. So it doesn't matter how busy you are or how much time you have. It will work for anyone. One framework, that's it. Because most traders, they think complexity equals intelligence. That's wrong. It doesn't. Clarity does. And this is how most traders operate. Believe me, I've seen thousands of traders, from my students to online, and I see their screen is too complicated, too much noise, and they wake up every single day, they look for another strategy, they look for another indicator, another information, another signal group, another magic pill. And the more information they consume, the more confused they become, because nobody ever gave them a real framework that fits to them. So if you look at the old way, in my opinion, this is where you look at isolated concepts, random strategies, and information overload. But with this framework, market logic, one simplified system, and clarity, that's the whole difference. Now, I want you to really understand one thing. I am not saying that indicators don't work. I'm not saying ICT don't work. I'm not saying simple supply, demand, support, and resistance trend lines don't work. What I'm saying is, what you need to understand is you need to have a complete blueprint. And once you understand this blueprint, whatever strategy you use, by having this blueprint in mind, you will succeed. So, very important thing to understand, that this is not another strategy, guys. This is a complete blueprint, and it has changed lives. Okay? I have seen my students go from nothing to making consistent money every single month, like over 10, 20, 30K every single month. Why? Because they implemented this blueprint. Some of them, they trade with indicators. Some of them, they trade with volume analysis. Some of them use Fibonacci, harmonic patterns. But what differentiates them from other traders is the blueprint. So I want to simplify the entire framework for you right now, because there are only 4 things you actually need to understand, and that's it. And you will be able to unlock and trade any market. So please pay close attention. So the first step, obviously, and some people say, okay, if it's that obvious, is it simple to see? Yes. Identifying where institutions are active, because most retail traders, they enter randomly, institutions don't, and you need to understand that. So the first thing we identify is where major buying and selling activity entered the market, because once you understand that, you remove a massive amount of noise. So what I'm going to do right now is I'm going to move to the charts, and I want you to pay close attention. I'm going to show you a simple system that will transform everything when it comes to looking at charts from now on. Once you see this, you can't unsee it. Whether you are a beginner, never tried this before, you are lucky, especially you, because you haven't built any bad habits yet, at least. And for you who are experienced or intermediate trader, or wherever you see yourself with your level, this is really going to be a game changer for you. So let's head over to the chart, and we're going to take different markets. We're going to go through indices, commodities, and the forex market, and I will prove that this system really works. So when it comes to identifying institutional participation in the market, why is it important for us to be able to identify the institutional participation? Because there are certain levels in the market that we want to see make a reaction once price gets there. So once price gets to those levels, we want to see an immediate reaction. And how come we want to see that immediate reaction? Because we want to see that the institutions are supporting this level. Either they're buying at that level or they are selling at that level. So the only thing we need is a candlestick chart. There are so many other ways to look at a chart, but the only thing we need is a candlestick chart that looks like this. I'm on TradingView right now. Most of you that trades out there know what TradingView is. And for you who is a beginner, don't worry, I will teach you how to use TradingView in another video. However, if we look at the system right now, the only thing we need to understand is two things. We need to be able to identify where the accumulation started of either buying or selling. And we need to implement market logic to see who are really in control in that zone, whether it's buyers or it's sellers. If it's buyers who are in control in that specific zone, we want to buy once price reaches that level. If it is sellers that are in control in that zone, we want to sell once price hit that level. So what we want to do is we want to identify demand zones under the market, not any demand zone as you think, and we want to identify supply zones above the market. So what do we want to do when price reaches a demand zone? We want to buy, and when price goes up to a supply zone, of course, we want to sell. Okay, speculating the price will go down. So how do we identify these levels? So take notes right now. I promise you, this will blow your mind. This is how simple it is and how simple it should be. So this is the NASDAQ, and we are currently in a monthly time frame. As I told you before, this works in every market, any time frame, if you have the right context and the right understanding. So if I look below the market, what I'm looking for is a candle or candles where the body is smaller than the wicks. If you look at a candle, the volume, which is the body, is here. So my up candles are green, down candles are black. So when price goes up, it's green. When it goes down, it's black. So you can see those thin lines. This is what we call wicks. The body, okay, the body is where the vast volume is in that trading a month or day or weekly, depending on what time frame you're looking at. So if I go down, I can see the first candle, which is still fresh. Price hasn't reached this point yet, where we can see the body is smaller than the wicks is right here. So what I'm going to do is I'm going to put a box, okay, on it. All right. So this is my demand level. Now I want to implement market logic because I want to see who are in control in this area, in this zone. And what I need to do is I need to go a time frame lower. So right now I'm on a monthly time frame. Each candle represents 1 month of price action. So I want to go lower. It could be weekly or it could be a daily time frame where each candle represents 1 day of trading. And I want to head down to this level and listen carefully because this is where the magic happens. If we want to see that buyers are actually in control in that demand zone, because obviously we want to buy if it's demand, we want to see, listen carefully, we want to see an attempt from the sellers to try to push down, but they failed and buyers took over. We want to see that in the zone. And I'm going to show you different examples from different markets so you know that this is actually real. So here we can see this is our demand zone. Remember, this is from the monthly time frame. We marked out this demand zone, and then we went down to the daily time frame to really zone in and see how the participation was at this price level. And we can see that the sellers had an attempt to push price lower. They failed. Buyers took over. So we saw the price went down. It went below a low, okay, an area where we, suppose the price is going to go lower once we breach that point, but they failed. Buyers took over and we had this explosive upper movement, a reversal. So this is the framework. We want to see a demand zone, let's say on a monthly time frame, and we want to go lower, and we want to see that the sellers actually tried to they attempted to bring the price lower, they failed, buyers took over. Once price comes down here, once price comes down here, we want to see an immediate reaction, and this is exactly what happened. Do you think I was in this movement? Of course. This was the movement that I was in, but also my students. So how was I able to call this movement? Because the zone was really, really strong. Now, let's look at another example also in the NASDAQ market. So now we're going to head over to a weekly time frame. Okay, so let's see what happened here with price. So price kept moving up, and if we go below price, I want to find candles where the body is smaller than the wicks. And the first zone I lay my eyes on is this zone. And this is all about training your eyes, guys, okay, to see these fresh zones. So I'm going to put a box around this, mark out a zone. And again, how do I want to see if there is a high probability for price to react once we get down here? If I actually want to buy, I want institutional participation. I want to see buyers be present, okay? That's what I want to see, okay? Bear with my English. My English is not my native language, so I'm really doing my best here to explain it to you in a manner that makes sense to you. So what do I want to do? I want to go down to a lower time frame to zone in and see who are actually in control. So now we're on a weekly time frame. I want to go to a lower time frame. Let's say it could be a daily, it could also be a 4-hour. And again, what I want to see is an attempt from the sellers that they tried to push price down, okay? I want to see they tried to push price down, but they failed, and buyers, they took over. This is exactly what we see here. The sellers tried to push the price down, but they failed. Buyers took over, and price made an explosive up move. So this tells me as a trader that buyers are probably going to step in again this area, because we know that this is a fair price for the buyers to engage. So let's see what happened once price went down into this area. Boom, you see that? Immediate reaction, okay? And I'm gonna show you also another example, which was here actually yesterday while I'm making this video. I'm gonna show it to you right here so you can see that this works on any time frame, okay? I'm still in NASDAQ, okay? I'm on the 4-hour time frame. Listen carefully. I want to go down and I want to find the candles where the body is smaller or are smaller than the wicks. Here I can see 2 candles. Body is smaller than the wicks. I want to draw out a zone, okay? And in this area, I want to see sellers try to push the price down. They failed, and price exploded up if I want to be a buyer. So I'm going to go down to a lower time frame. In this example, there's a 15-minute time frame, and it could be here, it can also be before, but I want to see an attempt of the sellers. They tried to push price down, they failed, price moved up. Now I want you to see what happened once price came into this area. Look carefully. We came down and boom, exploded up. This is one market. Let me show you another market. Let's go to palladium. Okay, this is also a trade I made. This is metals, okay? So now we're looking at palladium, and I am on a weekly time frame. Okay, I'm showing you this. This is another market. Okay, so I can show this is the exact same framework. Now at this example, we're looking also at a buying example. I'm also going to show some selling examples from other markets. And I want to go down and I want to identify the first area where we have a candle where the body is smaller than the wicks. This is obvious. We have one right here. So I'm going to mark out a zone here. And what do I want to see? I want to see buyers be present here. I want to see buying pressure once price come down here. How do I know that? I need to zoom in to a lower time frame in order to identify whether the buyers were in control in this area. So let's go down, let's say to a 4-hour time frame. And what I want to see is I want to see again, I want to see an attempt from the sellers to try to push the price down where they failed, and I want to see buyers step in and push the price up. And here we can see price went down, and what happened after that? Buyers took over and price exploded up. This is the signature we want to see. This is what tells me that institutions were present here. So what happens once price reach this area? Look carefully and see the reaction, how fast it reacts once price hits there. Boom, you see? This is a movement that you can make money on, right? Price comes down again, it's okay, that can happen. But look carefully, it's an area, it's a specific level where price actually reacted. Do you think you can make money on this up move? Of course, and that's the whole point. Let's look at another market. Let's look at crude oil where I made it short. Okay, let's look at it. So now we are looking at crude oil, and in this example we are going to reverse things because now we're looking for lower prices. Okay, so what we want to do is now we want to go above the price and we want to look at supply zones. Again, what we're looking for are candles that are smaller than the where we see the body of the candle is smaller than the wicks, and here it's very clear. I'm gonna mark out a zone. So now I'm on a daily time frame. So what I want to do, I want to go to a lower time frame, zoom in to see how the participation was in this area and whether the sellers were in control here. So I want to go down to a lower time frame. I mean, of course, when prices go down, it means the sellers are in control. But let me say it another way. We want to see whether there are still sellers up there who are present and that will push the price lower. And as we can see here, we want to reverse thing. We want to see buyers tried, okay, to bring the price up, and then we reversed and sellers took over. You see this? Explosive movement, not like slow and steady movement, explosive movement away from the area where price were pushed up by buyers, they failed and price came down. So what do we expect once price hit that level? We expect down movement, and this is a movement where you could have shorted and ultimately you could have made some money. Okay, so let me show you this area. What happened once price hit? It came up and boom, we saw how price reacted. Okay, so that was crude oil, that was palladium. We looked at indices. Let's take one more market. Okay, let's take forex. Here we are looking at the New Zealand dollar against the Canadian dollar, so NZD CAD. And what I did here is I made a buy order. What did I do? I looked below price. I identified a demand zone, not any demand zone, with the special signature, the secret sauce. And I see two candles where the body is smaller than the wicks. And I can see them here. This is what I mark out. This is my zone. And what do I want to see? I want to go down to a lower time frame and see if buyers are still present. So I'm going to go down to a lower time frame, let's say a 4-hour time frame. And remember here, the signature is this. We want to see sellers, they tried to push price down and buyers took over, and we see explosive up movement. This is what we see here. So this tells me that institutional buyers are still present in this area. Now look what happens when price comes down here. Immediate reaction. Look, price came down and immediate reaction. That's amazing. Let's take one last example because this is a trade that I took recently. It's in the sugar market, so sugar futures. Okay, let's take more markets. This is the last example I'm going to show. So now we are looking at the sugar market, and here I was selling, I was shorting, so I was speculating price went down. So I was shorting from a supply zone. So price came up, And we can see here a candle where the body is smaller than the wicks. I'm going to draw out a zone here. And what do I do now? I go down to a lower time frame to identify whether sellers are still present in this area and still are in control. So what do I want to see? I want to see that buyers try to move price up higher. They failed, and I want to see that sellers push the price down, not just with slow and steady movement, but with explosive movement. And that's what I see here. See, buyers tried to push price up. Look how the sellers took over. Boom, one big explosive down candle. So what do we expect once price hit this area? You want to see the sellers take control again once price hits this zone, and that's exactly what happened. Bam, look at this movement. So you see how simple this framework is. So the next thing you need to do is just to train your eyes to identify these zones and understand the market logic behind. Because of course, how come price reacts so fast? Because there is a market logic, of course. Because the second thing you need to do is you need to be able to understand how to identify whether price is in a discount or it's in premium. Is price expensive or is it cheap? Because more traders, they buy after price already moved, or they sell after price already collapsed. That makes no sense. You need to buy cheap, and you need to enter when price is at a discount, and you sell expensive and you exit when price is at a premium. That's how institutions think. And just by looking at supply and demand area, you can identify whether price is at a discount or premium or in the middle where you want to keep away. The third thing you want to do is you want to understand the current market that you are currently in, right? What condition is the market in? Is it trending? Do we see an uptrend? Is it reversing? Do we see a range where we have sideways movement like a consolidation? Because most traders, they force trades. We read the context. And what we want to do with this context is we use it for our expectations. We adapt to the current market condition so we can know how much we can expect when it comes to, taking profit, right? Because obviously, if we see, for example, if we see, let's say in this example where we looked at the sugar market, we can see that it's in a clear downtrend. So once price hit a supply zone, I'm expecting a certain movement, okay? And that's the third thing you need to learn. The fourth thing you need to understand is how you execute properly. Once direction and value and institutional positioning align, now we optimize entries. And that's where position increases and risk decreases. So see it like this. Once you identify the real supply in the market and the real demand in the market below the current price, you need to be able to see whether price is at a discount, a cheap price, or expensive. If price is expensive, of course, you don't want to buy. And if price is cheap, of course, you don't want to sell. Okay? Once you understand that, then you need to identify the current market condition. And once you have that, you execute. Okay, really, really, really simple. So we identify the institutional activity. We want to see how value is, whether we are at a premium or a discount. We want to identify market conditions, and we want to be able to execute properly. Master these 4 things, and you only need 5 to 10 hours a week to trade with clarity and confidence. This is the entire framework. 4 things, that's all you need. And then now you're thinking, wait, is that really that simple? Is it really that simple? Yes, that's the whole point. Trading became dramatically easier once I stopped trying to sound smart. Complexity, not intelligence, guys. Clarity is 5 to 10 hours a week, one simple framework, and that's all. That's all this framework asks of you. The rest is only clarity. So, and honestly, I genuinely don't see a lot out there teaching trading from this perspective. Most people, they teach isolated concepts. I teach market logic. I'm already ranked a top trader in the world. I don't need to sell you a fantasy. I'm not here to flex watches. I'm not here to rent supercars. I'm not here to fake a lifestyle. I trade, guys. That's what I do. And if I can help simplify trading for people who are genuinely serious about this, then I want to do that, of course. Now, honestly, I don't know exactly how my team will guide you from here. Maybe there's a call somewhere on this page. Maybe there is more training. Maybe there's a way to access the blueprint. I leave that part to them. But what if trading really can become this simple? It can. And it only takes 5-10 hours a week. Take the next step, take the leap, and join our community.